we got some more jobs related data today, but tomorrow's the big one. So the market moved in a positive direction going into tomorrow's announcement. It kind of gives us a little bit of hope that we might end up getting what we expect in terms of weaker job data to justify the rate cut that's currently priced in nearly 100% in September. And then again, another rate cut by the end of the year, which also is currently priced into pretty close to 90% odds. So, we're going to justify that with some weak data as long as it's not 2 weeks. So I spell out today kind of what we can expect to see tomorrow. If we get what we expect, I also spell out what would happen in the worst case scenario and what, what that could ultimately lead to going forward here over the next month or two. So we're going to break all that down in today's video. We'll take a look at this current setup and why it's set up for a positive response tomorrow from the market standpoint. But the question would be, how much would we go up if we do get what we want? So I break that down as well. We take a look at the important intermarket relationships that are kind of in holding patterns, and especially with yields. I told you before, that's one of the biggest drivers we have right now. What do I expect to see from yields tomorrow, and how will that impact the market? So we break that down, as well as our sector rotation. A pretty good, not the greatest sector rotation, a little bit of a red flag, but for the most part it was a pretty decent sector rotation today. We'll take a look at the important elements there in terms of how can we maintain this bullish trend from a rotation standpoint. And then our trade ideas in one of the sectors have been doing very well, this communication services sector. Not the stock that's been in the news lately, but another stock that might be playing catch up a little bit. And we talk about how to trade that. So let's go ahead and get started. Today is Thursday, September the 4th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we rallied up today, up almost 1%. So pretty decent rally, bigger than average range, really pushing higher in the after hours. The near term, as a result, the near term line rallied up above the 80th percentile. Now it didn't, the momentum line didn't get up there. So that's a little bit of an issue in terms of the potential length of this particular near term decline or rally. We did not get a new high, though we're very close. We're only 6 points off of a new high. So very, very good move late here. So a good strong pattern. We're 1.5% above the moving average. Again, not as strong as we'd like, because you'd like to see that momentum line get there, because then, they tend to be stronger, maybe last a little bit longer. Nothing's 100%, but generally speaking, if you have a good momentum move, it's easy for the near-term line to kind of just follow suit. But again, a strong near-term rally. We're coming off of a higher near-term low. A higher near-term low, you would expect that we'd probably get to a higher near-term high, especially again considering how strong today's move was. If you take a look at the NASDAQ 100, remember it got a bull tag, and we are definitely closing above. We closed above the high of the bull tag yesterday, and we've built on it today. We're back up now almost 1% above the moving average. The near-term line has crossed above the intermediate line. I don't know if it quite did that yesterday. Let's see here. It did not do that yesterday, but has today. So, and it crossed above 80. The intermediate line's now rising, so we're back to dark green shading and a green line. Of course, the momentum line's not joining it. So, and you can see the momentum line for the NASDAQ hasn't gotten up into the reversal zone since that day right there before I left on my cruise in the summer. It's been pretty, it's gotten in the bullish territory, just not very strong. And as a result, you can see we've been pretty flat. We closed that day on the 17th at 23,081. We're at 23,600 now. So we're not very far above. You can just see kind of where my cursor is. We're not very far above that. There's lots of ups and downs, but not enough to really get a trend going. And that's the problem when you don't have that momentum line really kind of lead the way higher to the upside. Almost up 1% there. The Dow Jones lagged, but still pretty good, 0.75% gain. The near-term line coming back up above the chart's midpoint into bullish territory. The momentum line here did jump into the upper reversal zone, so that is a very good sign for the Dow Jones, for the near-term line itself to eventually get up above 80 and then potentially stay there for a while. Remember, you can see it doesn't stay above 80 for a long time. But you would like to get that momentum line there to give it the best chance to stay as long as possible up there. So that's kind of what we're seeing there on the Dow. Again, we did not get a new high on the Dow either. And then finally, when you look at the Russell 2000, the near-term line crossed above 50 and 60. The momentum line was higher than the near-term line, so that's a good pattern. It's not above 80, but at least it's higher, and there's a good chance that both lines get above 80 here tomorrow if we can really build on this move. Keeping that posture bullish, strongly bullish, because the intermediate line's not only above 80, it's still above 90. So it's a very strong bullish posture. Market sentiment's rising. It's almost back above 80 itself. So very good trends all about. I mean, we've had that bull tag on the Russell. We've really built on that bull tag with this move. We had a little bit of a near-term decline here to a higher low. Technically, this was a near-term decline too, as the near-term line did get below 40, barely, but it got below 40 there. So, we're having a pretty decent run. We had a good momentum move last time. And I mean, you could argue we're kind of still on the same near-term rally, despite, the little bit of a decline, just a toe dip, a pinky toe dip into bearish territory there. So really good short-term patterns for the major indexes would suggest, again, barring some unexpectedly bad news coming from the jobs report, the technical environment is set up for the market to respond favorably to the jobs report tomorrow. Again, something can come out that the market doesn't know about, and that can change. But based on everything the market knows, and we've gotten a lot of employment data over the last this past few days, based on everything the market knows going into tomorrow, it's set up for a good day tomorrow. So we'll see from a short-term perspective on the market forecast if we follow through on that. All right, well, that does it for our Market Outlook preview video. You can unlock the full version of the Market Outlook video at marketscholars.com. There's a link down in the description below, as well as the pinned comment. You get access, all of our subscribers at Market Scholars get access to the Market Outlook videos, the full version of the videos, starting with our foundation tier, which is our most basic tier at $29 a month. You get access to these videos for only about $1.40, a little bit less than $1.40 per video. You get access to the full version of the videos every day. You get the trade ideas that come along with each video. You get the Market Outlook Live, where we at 3:30 Eastern time, we put on the trade for the day, as well as we manage all the existing trades that we have from prior Market Outlook videos, talk about when we should get out of them, which is probably a lot more important than just telling you what stocks to get into or what trades to get into. And then finally, you also get access to our Market Outlook Market Outlook Trade Tracker, where we track the results of all the trades from getting in and getting out of them, so you can see how they're doing throughout the year. So again, available for all of our subscribers, starting again with our foundation tier at just $29 a month, or $299 a year. You get the 2 months for free. Thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, comment, and share the video. Follow me on Twitter for more content between the videos at DavidSettle42. You can also follow me on LinkedIn, Facebook, all the other social media channels. Thank you very much for watching. Have a great rest of your Thursday night, everybody, and we'll see you all tomorrow.